Hey, I'm excited to talk to you today about a dynamic new organization that's helping women entrepreneurs and business owners sort through many of the financial decisions that are facing them. And in this video, Carly Meyer Bentley, the founder of the Freckled Strawberry, and I are going to talk about what to do with your 401k and other investments in a downturn like the one we've just been through.
Calvin, thank you so much for having me with you today. You know, being the CEO of the Freckled Strawberry, we've been in business now for 7 months, and we have 50 Freckled Strawberries working through the methodology at present. Some of the questions that are coming up in the conversations that I have every day have to do with the downturn in the market. These ladies want to know what to do. So, Calvin, thank you so much, by the way, for also being on my advisory board. The Freckled Strawberry has now been born as of December of 2021. And today we're in August and we have 50 women enrolled in the Freckled Strawberry methodology.
Wow, that's a big number
in
a short amount of time.
A short amount of time. And a good majority of them are through the third step of this process. So, you know, there's a lot of conversation we have about women's relationship with money. That's really where we start, because women in general are not even sure how they feel about their money. So when we take it down the road, there's many conversations that reveal their confidence level in money, how they feel about money, how they feel about success around money even, which is kind of surprising. So one of the things I wanted to ask you was these 3 questions that keep circling among women right now. And I figured there wouldn't be a better person to ask than you, an advisory board member to the Freckled Strawberry Group. But one of the big ones has been, hey, Carly, the market is tanking. Should I continue to contribute to my 401k when the market keeps going down?
Wow. Yeah, that's an easy one. Absolutely, yes.
So yes, they should continue to invest in the... Okay.
Yes, absolutely. In fact, you know, we've all heard this over and over again, dollar cost average.
What does that mean?
Yeah, well, it means don't try to time the market. So make regular contributions to your investments, regardless of whether the market's up or the market's down or the market's going sideways. Just keep pumping money in.
Does that mean that every time I make a contribution and my 401k makes a purchase, I could be purchasing that same particular fund at a lower price?
Correct, or at a higher price.
Oh, so no matter what, but if I keep buying when the market's going down, that means that what I'm buying is actually kind of on sale compared to what I had before.
Exactly.
Okay.
And by the way, even when you're at a market top and you're buying, in the future, that could actually be an on sale price. That's the reason for dollar cost averaging, no matter what the condition of the market is.
Okay, so we heard that, ladies. Do not stop contributing to your 401k, even in a down market.
I tell people this all the time. You're not going to get rich by investing. You're going to get rich by saving. So if you stop saving, you're hurting yourself.
Gotcha. Well, thank you very much. One of the other questions is like, well, what if I'm maxed out in the contributions that I'm making to like these pre-tax dollars that you've told me to, you know, invest in my 401k? I'm totally maxed out and now I need something else to invest in. What do I do with all this surplus of cash?
Well, first of all, open an IRA. And if you can, open a Roth IRA if it makes sense from a tax perspective. So I tell people open up 2 IRAs, a regular contributory IRA and a Roth IRA. And then if it makes sense in your particular tax situation, contribute to the regular IRA and then convert it to a Roth if your income's too high and you can't go directly to the Roth.
So I have a few young Freckled Strawberries who are in their early 20s, and the idea of contributing to a retirement plan is the most unsexy, uncool thing that they want to do. And so I respect that. I mean, they've already maxed out in their contributions. The next conversation we typically have is, okay, does it make sense for me to buy a piece of real estate? Okay, well, 24 years old and you're still living in New York. Are you sure you want to buy a piece of real estate? Are there other types of investing that might be attractive for someone in that category who just is doing the right thing from a discipline perspective, contributing to their 401k, but they want to do something sexier?
Okay. Sure. Look, I am a proponent of diversifying into real estate. I think real estate is a great investment long term. The thing you have to be careful about there is it's a leveraged investment. So typically, unless you have enough money to buy the property outright, you're typically borrowing 20% of the money to buy it, which makes it a 5-to-1 levered investment. That's extremely risky. So, if it's the house you're living in, that's one thing. You're going to live there anyway. So that sort of removes some of the risk out of it, unless you're forced to sell it when it's below water. But you have to be very careful. I think real estate's a great thing to do. If you can buy a place as your first real estate investment, live there for a while, and then save up a down payment for your next house, buy your next house and keep the first one, that's a great plan.
So some of my friends are actually looking at investing in some, I guess, like these real estate funds, like a REIT or something, because I don't really want to, this is what they're saying, I don't really want to buy a piece of real estate yet, but there's other funds or something. One of the other things that I'm suggesting, and maybe you could agree with me on this, if they've already got a 401k and they're maybe punting around real estate or thinking about investing in REITs, does it make sense for them to open a brokerage account and have a separate brokerage or investment account that's separate and apart?
Sure. If they want to have exposure to real estate through REITs, sure, open a separate, TD Ameritrade, Schwab, whatever account, and you can buy real estate trusts, which are ETFs that invest in real estate. One thing I will say about those is when they drop, they really drop. They went down 70% in 2007 to 2009. That's more than the S&P 500. So they can be a scary investment, but if you're looking for something different, go for it.
So Calvin, you mentioned something, and this is the last thing that I'm really going to float, because this is the conversation that the Freckled Strawberry has with a lot of the berries going through the methodology. We're talking about diversification, and we're talking about discipline, and we're talking about loving ourselves in our finances. There is not a woman in the world that doesn't know what a macro is, and not what counting calories, and how we take care of ourselves through our diet and our exercise. The Freckled Strawberry believes that financially caring for yourself and having independence around your own finances is part of taking care of yourself, and it's part of your health. Right. So diversification really is kind of like discipline on making sure that you're contributing to all the things that make you financially sound and build wealth over time. So diversification includes understanding your budget, taking care of those pre-tax dollars and contributing into your 401k for taking care of yourself down the road, maybe investing in real estate to give yourself a home, maybe investing in another brokerage account because you have so much extra money that you need to do something with it. But
having an emergency fund isn't a bad thing.
Exactly. So diversifying, I think that would be a question that does come up next, understanding what diversification means. I have shared this, and maybe you can share it in another way too. Most people in general get a little glazed over when they look at a stock portfolio. What am I looking at? What does it even mean? So I like to share with the strawberries, if you think of a garden and you have all these different kind of vegetables in your garden, it's still one giant garden with all these different vegetables in it that are going to yield different kind of crops. So could you maybe explain how you would talk about diversification with anybody when it comes to their investments?
Sure, happy to. Would you mind if we back up just a second
Sure.
and talk about the 401k?
Yeah.
The reason I'm doing this is because you've mentioned pre-tax dollars. You really have to think that through, because a lot of people have an option of a Roth 401k. And the example I use to people is if you're an avid saver and you're doing pretty well financially, you could very well end up with more than $10 million 50 years from now. If you're fairly young, you're in your 20s, let's say, and you're an avid saver, you're making good money, and you could end up with, let's say, 10 million or more 50 years from now. Well, if the current rules hold, which they may or may not, and you have all of your money in a regular 401k, then you're going to be required to take 4% of that out every year at some point in your life. Now, in today's dollars, that's a $400,000 withdrawal from a $10 million IRA. So that's a lot of taxes to pay.
Right.
Right? So if you have the opportunity to invest in a Roth, I mean, personally, I like the idea of getting to the point where I have to take required minimum distributions and not having that obligation. So it's my decision. Do I take money out or do I not take money out? Also, with a Roth, there are no required minimum distributions.
Oh, okay. All right.
All right. So that's really something to consider here when you're thinking 401k dollars.
I guess I don't mean to interrupt. I was thinking just I want to make sure I mention to all the berries out there in Berryland that the different appeal to having investments in certain things really is dependent on what's driving you. So,
exactly.
I want to make sure I disclose that because there's many choices. Some, if you're looking to maximize and save for the long term, great. If you're looking to make quick returns and you're looking to make something a little bit more sexy, like my younger strawberries, they are looking for other things. So that's a great point in thinking about return over time and what you're building for yourself on the long term. That's something we should pause and think about.
Well, and you really can't leave out the tax ramifications, right? Or the constraints it's going to put on you as you get older, because those are very real things that could have a huge impact.
So you're saying not only am I planning for saving, but I need to think about the tax ramifications of what I'm doing today.
Oh my God, absolutely. Okay. In fact, let's take it another step. So now you've got this $10 million in a regular regular 401k, which turns into a regular IRA if you roll it over, and you pass away. So now you leave it to your heirs. Well, now your heirs have to withdraw it within 10 years, which I believe they'll also have to do with a Roth, but they'll have to pay taxes on those withdrawals, whereas with a Roth, they won't.
Gotcha.
So lots of tax ramifications, and do I do a Roth or do I do a regular one? And it's really important to think through those.
So in our conversation today, I wanted to bring some clarity around 401k contributions, what to do after you've maxed out on those contributions with all of your extra or surplus cash. What other types of investments make sense? You talked to us about, investing maybe in a Roth IRA to save for the long haul. We also talked about possibly investing in real estate as a primary residence or an investment property. So, and one of the great things that does come up is what diversification really means, and without oversimplifying it, that it is a technical skill. So, and if anybody has any questions about these conversations that we're having, or talking about opening a Roth IRA, or making sure that you're maximizing in your contributions and so forth, you can talk to myself or any financial advisor, or Calvin, of course, to see where you are in that space. Well, Calvin, thank you very much for your help on this. Our Freckled Strawberries are appreciative of the advice that you give and the thoughts that you have. I just wanted to thank you for participating with the Freckled Strawberry and giving us your advice, giving us your thoughts on this. And I know that all the berries will be appreciative of any kind of insight they can gain from a professional like yourself.
Well, thank you, Carly. This has been fun. I hope we'll do this again soon.
I hope so too. I will keep taking questions from all the Freckled Strawberries out there that we're working on. If anybody out there has questions about what any of this even means, you can contact us and we can have a private conversation where no one will have to know that you might not know what some of this stuff means, and we can put those questions out there anonymously.
That's great.
All right, Calvin. See you next time.
All right. See you, Carly.
All right. Bye.
I'm Calvin Rose, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss another upcoming episode of Invest Smarter. That's all for now.